Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Loui, Head of Research at Malacca Securities, to discuss investment, macro, and geopolitical impacts on the Asian investment market. Loui, it's great to have you with us. Welcome to Trade Talks.
Morning, Jill.
Share with us M Plus Global's house views. Should we start from global outlook? Do you think rate hikes have ended for 2023?
Okay, so based on the stats, we believe that the overall upcycle on the interest rate hike could be coming to an end. There are a few reasons that we think this is happening. Firstly, because the CPI, US CPI data has declined from 9.1% last year until the recent data was 4.9%. So hence the tool has been quite well taking effect right now. And we think moreover that the overall consensus is looking at 4.1% in the upcoming data. So which means that there are more decline phase in the inflationary pressure. Second thing, the US GDP is also on the expansionary phase, adding 1.1% for the first quarter 2023. As it is still growing, so we think it need not to reduce the interest rate at the same time. So thirdly, the recent higher than expected jobless claims is standing at 261K, the highest since October 2021. Since this labor market is cooling off, so we believe that the Federal Reserve could actually stay less hawkish and keep the interest rate at 5 to 5.25% at least for the rest of 2023.
With the macroeconomics trend and considering the geopolitical environment, what is the impact on the Asian investment market?
So according to the McKinsey Global Survey on Economic Conditions during December 2022, the respondents remain wary on the future of the global economy and their country's economy than they were at the start of the 2022. Also, the respondents continue to point towards some geopolitical conflicts and inflationary pressure as the most pressing economic risks over the near to midterm. While the elevated interest rate environment might be pressuring the overall investment sentiment. Meanwhile, we also understand that overall FDI has the flow of FDI has dropped significantly during 2020 to 2021 due to the COVID pandemic, but it has recovered quite substantially during 2022, and we should be seeing more FDI in the business activities going forward in 2023. And during the World Economic Forum in Davos early this year, Liu He, which is Chinese vice premier and top economic advisor, met Western business leaders and stressing that China's reopening and he welcomed more foreign investment and emphasized on China's economy would improve significantly in 2023. So overall, we believe that since the China has reopened since the start of January 2023, we believe most of the resumption activities will start and go in full force. And we believe that aviation, tourism, consumer, gaming sectors in Asia and regionally will grow better.
Diving into your local market in Malaysia, how do you see the market? What are the investment opportunities and the risks?
Okay, so on the local front, the trading activities are slightly softer at this juncture due to several reasons. Firstly, external events such as the US and Europe banking crisis have impacted the sentiment on our banks, on their banks, the US banks. And but again, our banks are not really involved in startups. Malaysian banks are not involved in startups and also crypto-related borrowings. So the sentiment of banks is fairly negative at one point of time. But again, if we look into the weak sentiment, second point I want to point out is that we have the upcoming 6 states elections that will be important for foreign fund inflows. Since that the opposition parties has been fairly stronger during the GE15, there are sentiment to say that this could affect the overall market sentiment going forward. So hence, before any clarity of these 6 states election, foreign investors may stay cautious under this scenario, and some sectors may refrain from investors stocking in, such as number forecast operators and also gaming related shares. Nevertheless, we believe that there's still opportunities such as within the telco and utility sectors, as well as the consumer stocks, which is having all these defensive characteristics.
What is your advice to investors?
Okay, so with the full impact of this interest rate upcycle and this elevated inflationary pressure, we believe that it may price into corporate earnings this year, and this might be challenging for corporates to withstand this kind of environment. So we opine that the investors should monitor the reporting season to gauge further efficiency of the company, and while positioning for defensive characteristics such as just now we've mentioned telco and utility sectors. Investors are advised to look out for also high net cash company under this elevated interest rate environment, with companies that provide stable dividend yield. Meanwhile, regional exposures such as Hong Kong and US will be also crucial. The investors may look into exchange-traded funds that have exposure in these regions. Also, we are looking into some themes such as artificial intelligence. With that, we could look out for trading opportunities within the AI theme or semiconductor-related industries ETFs for exposure.
Loui, can you tell us more about the collaboration with Nasdaq?
Yeah, we are proud to say that Malacca Securities is the first homegrown securities house in Malaysia to provide Nasdaq's real-time market data to the Malaysian traders and investors. Apart from providing real-time data, we also work with Nasdaq to empower learning and education for Malaysian investors to gain more insights to the US market.
With that in mind, how is having real-time US market data instead of delayed important to Malaysian investors?
Oh, yeah, it is very important for traders to have real-time data. It will allow traders to react swiftly on a market, capturing the upside and downside of the trades. Especially real-time data will provide most accurate and up-to-date information to the traders under a very, very volatile market environment. Also, we have to understand that in a fast-paced market, having access to real-time data can provide competitive edge for traders and respond swiftly to the market events, which can be crucial in capturing profitable opportunities. So delayed data puts users at a disadvantage as they may be acting on an outdated information compared to their competitors. So in a nutshell, without the capability of real-time market data, the traders will be similar to driving in the dark without the headlamps or swimming in the pool without a float. Yeah.
Loui, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.